Good morning, everyone. A very technically not warm welcome, actually very cold welcome because its temperature is really going down. It's winters, extreme winter at my place. Actually, temperature is almost 6%. So after a long time, after a long break, I am here again. Your income tax faculty, C. Ankit Sharma. So today we will be discussing Chapter 8 of Income Tax Part A, and that will be regarding filing of income tax return. So we are at the end of our income tax syllabus, and we will be discussing chapter 8, and then after chapter 8 there will be chapter 9 provision will be there. Chapter 8 technically belongs to the summary of everything whatever you have gone through in this income tax syllabus. In the initial topic, like basic concept, you understood the basic concept of income tax, like the definitions, the concept of taxability, the basic exemption limit, etc. etc. Chapter 2 belongs to residential status provision, in which we go through the provision that when a person will be regarded as resident, and in that resident, there is sub-classification like ordinary resident, not ordinary resident, and non-resident also. And then we studied the incidence of tax provisions there. Then the salary chapter, the house property, the capital gain, the PGBP, the income from other source, and you must have gone through the set of provision, clubbing provision, deductions provisions, TDS, TCS, etc. So we have done all the calculation. What we are going to study in chapter 8, I am just trying to explain it. From chapter 1 till chapter 7, the assessee or his consultant, whether it's a CA, etc., has done the work on behalf of assessee. That we compute the income of assessee, the status of an assessee like resident, non-resident, the deductions, etc. And now we have to submit all these information to the income tax department. Like we are studying from chapter 1 till chapter 7, just like our homework. The process which is has been done by the assessee or his consultant. But how income tax will come to know that you are a resident or non-resident? That what is your income under different heads of income, etc. How income tax will come to know all about this. So chapter 8 is describing the provision that how an assessee is going to submit his information to the income tax department regarding his status of residential purpose, his income, his clubbing provision, deduction, etc. So the process how we submit these information to the income tax department will be consistent this chapter number 8. So it's a technically theoretical provision. We have to find what is the meaning of income tax return. When we need to file income tax return, those person category who need to file income tax return compulsorily. What is PAN number? Where we should submit our PAN under income tax provision. What are due date of filing of return? What are belated returns, updated returns, revised returns, etc. etc. So I am just explaining you that what we are going to study in this chapter. That's a trailer of this chapter. So it's a good thing that it's a theoretical provision chapter. There is nothing numerical topic in this. But again, listen carefully. I have also told you this in earlier provisions, in earlier lectures also. Do not underestimate the power of theoretical provision. When we hear this word that this is a theoretical chapter, we thought, okay, we will do it at the end of the examination, before the examination start just. We do not give much importance to the theoretical provision generally, but that's not correct. So this is equally important chapter comparative to other numerical chapter. And it's a very important chapter for your practical understanding of income tax provision. If somebody is going to ask you, do I need to file income tax return? Do I need to file income tax return compulsorily? What is the last date of filing of income tax return? how we revise our return, etc. So this chapter is going to give the answer of all these kind of practical question of your life. Okay. So before starting the class, good morning, namaskar, sat sri akal, suprabhat, vadakkam, kem cho, subah bakhair to all of you, and it's good to see you. Not technically, I am seeing you, but it's good to interact with you again. After a long time, I believe that you all are studying very hard. And you must have gone through the provision of TDS by the other faculty, in which you must have gone through the provision of TDS, TCS, and deductions topic, of course, a very important topic. Then set of provision, clubbing provision, etc. And you are in the process of becoming a chartered accountant very soon. So let's see, Mr. Path Rana, good morning. Mohammed Akib, good morning. Subha Bakhair Mohammed. Ajay Chauhan, good morning. Divya, good morning. Parth Rana asking Kem Cho. I am very good. Okay, Mohammed Sohail, good morning. Divya Kumari saying Happy Diwali. Okay, Happy Diwali to you. Kadambri Bhatt, good morning. Hardik, good morning. Kokanati, Bala Murali Krishna, good morning, sir. After a long time. Yes, after a long time. Mr. Sankaran, good morning. Manohar Yadav, Parth Sre, good morning. Neha, Hemlata, Swati, Tumpa, Sushil. Sushil Kumar saying good morning, sir. Happy Netaji birthday. Okay. Sakshi, good morning. Sanjana Ben, Tikshana, Thoti, Jagapati, good morning. Suvidesh, Shreyas, Rasmita, Pooja, Gopi, Tanuj. Okay, my God. Komal, Santosh, Ekta, Mamta, Neha, Avinash, Swati, Ankur, Padma, Priya, Mittal, Kunangla. So, a very, very good morning to all of you, and I welcome you in the class in which we will be discussing chapter number 8. So, of course, the process we have to start. These are the guidelines. Of course, those have taken the mic lectures already, they must know these guidelines. But if anyone is of you is going to take the class first time, kindly follow these guidelines for the better understanding of classes. So this is the discipline is the key to achieve any goal in your life, and these should be notes are based on study material issued by ICAI. Provisions are for assessment year 24-25, which will be applicable for May 24 and November 24 examination. Okay. All queries will be taken after 30 to 40 minutes. So if you have any query, you can send it to me and I will answer it after 30 minutes. So we will not break the flow of our lecture. Please focus during lecture and ask queries related to topic. Please try to take live lectures for better understanding. Kindly download notes before lecture for better understanding. We'll take MCQ tests at the end of each, and the eighth point is very important. If anyone wanted to ask any query in Hindi, you can ask me your query in Hindi and I will answer that query in Hindi. All other queries will be answered in English only. So before starting the class, here is thought for the day. As usual, there will be a story also after the break. So the thought for the day says, success does not come to you. You go to get it. So of course, that's a very true thought we can say that success is not going to come to you automatically. You have to work for it. So you have to go and find your success of life. And for now, that is becoming a chartered accountant as soon as possible. So before starting the class, let me explain what we are going to discuss in Hindi also in a summary. तो अभी तक हमने जो भी पुराने चैप्टर्स में पढ़ा है फ्रॉम चैप्टर 1 टिल चैप्टर 7 रिगार्डिंग द रेजिडेंशियल स्टेटस प्रोविजन रिगार्डिंग द सैलरी टॉपिक रिगार्डिंग हाउस प्रॉपर्टी एटसेट्रा सो दैट इज वर्किंग वो सब कैलकुलेशन एसएससी खुद करता है या उसके बिहाफ पर उसका कंसल्टेंट लेकिन हमारी इनकम कितनी है हमारी सैलरी कितनी है हमारी अदर हेड की इनकम क्या है हमारी डिडक्शंस क्या है ये इनकम टैक्स डिपार्टमेंट को हम कैसे बताएंगे किस तरीके से बताएंगे कब बताएंगे नहीं बताने पर क्या होगा ये सब चैप्टर 8 बताने वाला है तो चैप्टर 8 we will be discussing the provision to filing income tax return regarding all concept all provision that how we need to file an ITR when we can file an ITR etc so let's get started. I have already uploaded the notes. So this is chapter 8, provision for filing return of income and self-assessment. Okay. So income tax return filing provisions. Chapter 8, chapter overview. What we are going to cover in this chapter, there are 3 parts. In first part, we are going to see the filing of return, that is compulsory filing, return of loss, belated return, etc. Interest and fee for default in furnishing return of income. So if we are not furnish our return of income on time, so what will be the interest and fees is going to be charged. Other provision regarding the PAN number, then Aadhaar number, etc. So these are the provision what we will be discussing in chapter number 8. So return of income. So I have just explained you what is the meaning of return of income. So return of income is a information, is technically an information which an assessee is going to submit to the income tax department. Suppose it's just like that we have done all the calculation at our part regarding our income, regarding our residential status deduction. So we need to inform to the income tax department also that this is my income for the year and this much amount of tax I need to pay via a specified form at a specified time in a specified process. So that is all regarding the return of income. The process of submitting of information in a prescribed format to the income tax department, that is called return of income. So the provision says the Income Tax Act 1961 contain provision for filing of return of income. So again, I am saying what is the meaning of filing of return of income? Return of income means information regarding your income, your tax, your deduction, your clubbing, your set off, your all the concept which we have gone through from chapter 1 till chapter 7. Return of income is the format in which the assessee furnish information as self-declaration regarding his total income and tax payable. So that is on your part that whatever income you want to declare to the department, that is going to be declared via return of income. After the furnishing of information, department will assess it that whether it is correct or incorrect. That's called assessment. That is not our part. We have to just submit the information, then department will do the assessment. Okay. So the format of filing of return by different assessee is notified by the CBDT. We all know what is the meaning of course, CBDT. The format of filing returns by different assessees notified by the CBDT. The particulars of income earned under different head. Gross total income, we all know these terms now. What is the meaning of gross total income, etc.? We all know that. Deductions from gross total income, what is our total income and tax payable? That is all is going to be explained under return of income to the income tax department. By the assessee are generally required to be furnished in a return of income. In short, a return of income is the declaration of income and the resultant tax by the assessee in the prescribed format. Exactly that I was explaining to you. Now the question comes into the mind. Is filing income tax return mandatory? You can ask this question to yourself also. That do I need to file income tax return? Or my parents need to file income tax return? When a person need to file income tax return? Mandatory. So if you fall under these provisions, that is compulsory filing of return of income, section 139(1). So if you fall under any of the provisions we are going to discuss under section 139(1), that means you have to file your return of income compulsory. Okay. One by one, we will discuss these. Okay. Okay, Mr. Gunjan Kumar is asking, in income from house property, if a owner have one house and one apartment of three flats, then how many houses we consider two or four? Mr. Gunjan, in the starting of this chapter, I have explained that please ask your query related to the topic. Now, this is the query which is related to income from house property. So, if I am going to answer these kind of query, then we won't be able to cover our chapter. We have only one session regarding these provisions. So you should ask this query under income from house property chapter. That's why I say that you should take live classes. Because if you see the recorded classes, then might be what query you want to ask, you're not able to ask during that class. So only those students can ask your queries if they are taking their live classes. But of course, for time being, if you have one house property and three flats, so flats are treated as separate houses. So only two can be claimed as income from house property for self-occupied purpose. Okay. I cannot explain in detail because we do not have time and this is not the topic what we are going to discuss. So sorry. Okay. Santosh, how the notes is given, can you say, please tell? It is on the institute site. You have to go to the ICAI BOS portal, the BOS knowledge portal. You will log in with your name and CRO, and then you can download the notes. Okay. So, point number two, in which we are going to discuss compulsory filing of return of income, section 139(1). So, point one says, let me explain you with the help of a chart. Okay. So, chapter 8. Compulsory filing of ITR. So we have five cases. If you are falling in any of these five cases, you have to file your income tax return and that is mandatory. So if you are a company or a partnership firm, you need to file your income tax return always, whether you have income or loss. So if you are a partnership firm or a company, you have to file your income tax return always. Okay. Then other than company or firm. So if you are not a partnership firm or a company, then when do you need to file your income tax return? It says if your total income, your TI, exceeding the basic exemption limit. So basic exemption limit is under section 115 BAC, it's 3 lakh. So if you are opting for default tax regime and your total income exceeding 3 lakh rupees, then you have to file your income tax return if you are other than a company and firm. This provision is for those are having slab rate or those having the basic exemption limit. And if you are not opting for 15 BAC, you are not opting for 15 BAC. In that case, the basic exemption limit will be 2.5 lakh or 3 lakh or 5 lakh, depending upon that individual. So if he is a senior citizen, then 3 lakh. Super senior citizen, then 5 lakh. And for other, it's 2.5 lakh. So if your total income exceeding these limits, then you have to file a income tax return. So I guess all of you does not fall in category A, and I believe most of you do not also fall in category B. So until we are discussing point A and B, you might think that you are not going to file your income tax return. And if any of you fall in category A or B, you have to file your income tax return. We have more cases to come, that is C, D, and E. Point number C says that if you are a resident, an ordinary resident. Okay. Before going further, I have a request to you. My next class is on 25th and 30th. Okay. And that is regarding chapter number 9. That is calculation of tax. And it's a very, very, very important chapter. So it's a request from my side that before that chapter, kindly revise the salary provision, the basic taxability provision, that is slab rate tax, that must be in chapter number 1. What is the surcharge rate? The slab rate, 2,50,000 exempted, then 5% slab, then 10%, then 20%. Please revise the first chapter and the salary chapter. That's a request from my side because that will help you to understand that chapter 9 very easily. So all of you, please, if you are going to join the class on 25th, then kindly revise the salary chapter and the basic concept chapter, that is chapter number 1. So that will help you. Okay, so if you are a resident and ordinary resident, so if you are a resident and ordinary resident and does not covered in point A or B. So if you fall in A or B, you have to file a return. So those resident, ordinary resident, those do not fall in category A or B and satisfy any of these conditions, 1 or 2. First condition says if he is a beneficial owner. If he is a beneficial owner of any property held outside India. So if you are a beneficial owner of any asset which is held outside India, then you have to file your income tax return. Or if you are not a beneficial owner, but if you are a beneficiary, what is the difference between the beneficial owner or beneficiary? That I will explain. Just wait. So if you are a beneficial owner of any asset outside India or having a signing authority, or you are a beneficiary of any asset outside India, then you also have to file your income tax return. Clear? Now the D case says, if in case of any individual, HUF, AOP, BOI, and AJP. Individual HUF, AOP, BOI, AJP, if their total income, now that's a new concept, if their total income before allowing deduction and capital gain exemption exceed, again that same thing, basic exemption limit. That is basic exemption limit. So technically we can say that if the provision says if whatever is your TI, add back the deduction under chapter 6A and add the capital gain exemption, that section 54, 54B, 54D, 54 EC, 54F. Then if this value exceed the basic exemption limit, this value we are talking, then you have to file your income tax return also. Now the case number E, the case E having certain, if any person who does not fall in category A till D, but satisfies certain specified transaction. If you take certain specified transaction, which has been explained here under, then you also need to file income tax return compulsory. So what are these specified transaction? What is the difference between beneficial owner or beneficiary, etc., that we are going to discuss one by one in detail. So if any of the person falls in category A, B, C, D or E, so he or she need to file income tax return mandatory. One by one, we will discuss it. Here are the provision. Point 1 is technically A point. As per section 139(1), it is compulsory for companies and firm to file a return of income or loss. Clear? Point 2. In case of a person other than a company or firm, filing of return of income on or before due date is mandatory if his total income or total income of any other person in respect of which he is assessable. That is mean deemed assessee. So suppose Mr. A having total income of 8 lakh. So he needs to file income tax return as per point number 2. Clear? But now suppose Mr. A having a minor child also. That minor child income is 7 lakh. So minor cannot file the return themselves. So the parents need to file the return of minors. So Mr. A will be called deemed assessee in case of that minor. So if you are a deemed assessee, you are a trustee, you are a parent of a minor child who is earning income, etc. And if that person income exceed the basic exemption limit, then also you need to file the income tax return. So if you are assessee of your own income, and if that income exceed the basic exemption limit, you have to file return. And if you are not the assessee, you are the deemed assessee, you are the guardian, you are the trustee, you are the parent of some other person who is having income which is exceeding the basic exemption limit, you have to file your income tax return. Do not worry, I will explain in short in Hindi also after I will cover these 5 points. So those are connected to the Hindi medium. So they will also understand the provision easily. So first point was for the company and firm, they have to file return. For other than company and firm, if your TI exceed the basic exemption limit or if the person for whom you are a deemed assessee, if his TI exceed the basic exemption limit, you have to file the ITR. ITR is income tax return. Third category says every person being a resident and other than not ordinary resident. That means we are talking about the ROR. In India, within the meaning of section 66, who is not required to furnish a return under section 139(1). Those do not fall in category 1 or category 2. But the condition says, but if such person at any time during the previous year holds as a beneficial owner means real owner. So if he is the real owner of any asset located outside India, or has a signing authority in any account located outside India. So suppose you do not have income exceeding basic exemption limit, but if you have any asset which is outside India, or you are maintaining a bank account in which you have the signing authority outside India, then you have to file income tax return also. Or you are a beneficiary, you are not the real owner, but you are just like a nominee. Somebody else is the real owner, but you are getting the benefit of any asset. So that is called a beneficiary who is receiving the benefit from any asset. And he will get the asset when the real owner will be passed away. So that is called a beneficiary. It's just like a nominee. So if you are also a beneficiary of any asset located outside India, then also you have to file your income tax return. However, an individual being a beneficiary. So if you are a beneficiary of any asset located outside India, would not be required to file return of income under this clause where income from that asset is includable in the income of the person referred to in A. So if you are a beneficiary of any asset that you are receiving income on behalf of someone else, but if that income is included in the total income of that owner, suppose it says Mr. A is the real owner, or we can say beneficial owner, yeah, beneficial owner of any asset which is located outside India. And Mr. B is the beneficiary. So if any income derived from this asset to the beneficiary, he has to file his income tax return. Okay, suppose the income of 3 lakh Mr. B received as a beneficiary. So he has to file income tax return. But if this 3 lakh is not taxable in the hands of Mr. B, but it is going to be taxable in the hands of Mr. A, then he do not need to require to file a return. So beneficiary need to file a return when he is receiving income or accruing income directly indirectly into his hand. But if that income is already included in the hands of beneficial owner, then beneficiary not need to file income tax return. So meaning of beneficial owner and what is the meaning of beneficiary has been explained over here. You can read it, of course. Theoretical provision, these are, of course. This is a summary of the provision what we have discussed till now. Point number 4 says, further, every person being an individual or HUF or AOP or BAI, that means our D point in the diagram, whether incorporated or not, or an artificial judicial person, whose total income or total income of any other person in respect of which he is assessable. Again, the deemed assessee case under this act during the previous year. So it says, whatever is total income, kindly add back the deduction if he has claim and the exemption under section 54, 54B, 54D, EC and F. And after adding the deduction and these exemption, if this income exceed the exemption limit, then he is required to file return of income or income of the other person on which he is a deemed assessee. The basic exemption limit 3 lakh rupees for 115 BAC, in which you can claim the deduction of 80 CCD2 etc. and these exemption. So you have to add back these deduction and exemption. And if you are under a opting out of the default tax regime, that means you are not covered section 15 BAC, then the basic exemption limit is 2,50,000, 3 lakh and 5 lakh. So in that case, you have to add all the deduction of chapter 6A and the exemption 54, 54B, etc. So after that, if your TI exceed the basic exemption limit, then you have to file income tax return mandatory. For example, suppose Mr. A GTI is 6 lakh and his deductions, suppose 2 lakh and exemption under section 54. This is GTI before exemption. Suppose 1,50,000, 2,50,000. So suppose his TI after exemption deduction is only 1,50,000. So technically, as per point number 2, which says that you need to file return if your TI exceed the basic exemption limit. So according to point number 2, he does not need to require to file return of income. But now the new point has been inserted. So it says you have to add back the exemption. Under section 54, you have to add the deductions. So now your TI after adding the deduction and exemption is 6 lakh. And that is exceeding the basic exemption limit. So you have to file income tax return. Next is point number 5, that is point number E, which prescribed certain transactions. So those persons do not require to file return of income as per point number 1 to 4 as above, but fulfill certain condition which is given in point number 5. Then they need to file the income tax return. What are these conditions? Has deposited an amount or aggregate of the amount exceeding 1 crore in one or more current account. So if you deposit more than 1 crore or 1 crore in your one or more current account in a financial year, then you have to file income tax return. Has expenditure on amount or aggregate of amount exceeding 2 lakh rupees for himself or any other person for travel to foreign country. Has incurred expenditure on an amount aggregate means in a complete financial year we have to see it. So if you are paying more than 1 lakh rupees towards electricity consumption, you have to file income tax return. Other point number D says prescribed condition. Some other condition also prescribed in point number 1. if you are running a business and if its total sale, turnover or gross asset, as the case may be in the business exceeding 60 lakh in the previous year, you have to file income tax return. If you are in a profession and your professional receipt exceeding 10 lakh rupees, you have to file a return of income. If your TDS or TDS deducted 25,000 or more, you have to file an income tax return. And if you are resident, senior citizen, in that case, this 25,000 will be replaced by the 50,000 limit. Okay. Or if you are maintaining a saving account, one or more saving account, and you deposit 50 lakhs or more during the previous year, then again you have to file income tax return. So these are case number A to E, what we have discussed, in which you have to file your income tax return. So for better understanding, I can explain this all provision in a very short time in Hindi. तो आप लोगों को इनकम टैक्स रिटर्न तब फाइल करना है जब आप पॉइंट नंबर 1 से लेके 5 तक किसी में भी फॉल करते हैं. इसमें पॉइंट नंबर 1 कहता है अगर आप कंपनी या पार्टनरशिप फर्म है रिटर्न फाइल करना मैंडेटरी है. अदर देन कंपनी पार्टनरशिप फर्म है तो तब फाइल करना है जब आपकी टोटल इनकम बेसिक एग्जेम्पशन लिमिट को क्रॉस कर जाए. पॉइंट 3 कहता है अगर आप एक रेजिडेंट और ऑर्डिनरी रेजिडेंट हैं, ऊपर वाले पॉइंट्स में फॉल नहीं करते, लेकिन अगर आप बेनिफिशियल ओनर हैं किसी भी एसेट के जो इंडिया के बाहर है, रिटर्न फाइल करना जरूरी है. बेनिफिशियरी है तो भी फाइल करना जरूरी है. 4 कहता है अगर आप एक इंडिविजुअल एचयूएफ, एओपी, बीओआई या एजेपी हैं और अगर आपकी टोटल इनकम डिडक्शन ऐड करने के बाद चैप्टर 6A की और एग्जेम्पशन 54B, 54D, 54EC और 54F और 54 इनको ऐड करने के बाद अगर एग्जेम्पशन लिमिट को क्रॉस कर जाती है तो भी आपको रिटर्न फाइल करना मैंडेटरी. पॉइंट 5 में स्पेसिफिक कंडीशंस हैं कि अगर आप ए बी सी में से कोई कंडीशन पूरी करते हैं या पॉइंट नंबर 1 2 3 4 में से कोई कंडीशन पूरी करते हैं, एनी वन कंडीशन इफ फुलफिल्ड बाय यू, तो भी रिटर्न फाइल करना मैंडेटरी है. तो टिल नाउ वी जस्ट अंडरस्टूड दैट हु नीड्स टू फाइल द रिटर्न मैंडेटरी. You have to file voluntarily also if you does not fall in any of these category. But if you want to file return of income, you can file your return of income. There is no restriction. So that will be a voluntarily return. If you yourself want to explain to the government or give information to the income tax department regarding your income, even if you does not fall in any of these category, you are welcome. You can file your income tax return. Nobody is going to stop you. Okay. So we have just gone through the provision to understand that those person who going to file return mandatorily. But now the provision will tell you when to file a return. What is the meaning of due date? You must have listened this word that there is a due date of filing of return is coming. Due date of filing of return. So due date means that date till which if you file your income tax return, then there will be no interest, there will be no fee for late filing of return. So that is the date which is called due date. It just like in case of your examination, there is called a date which is without late fees, you can submit your examination form. But that is not the last date. You can also submit your examination form with some extra fees till a last date. So that is called last date when you can file your form or return with some late fees, some penalties, some interest. And due date means that you do not need to pay any kind of interest or penalty which is connected to filing of return if you filed that return up to due date. So due date is not the last date. After due date, return can be filed, but with certain penalty, interest or fees. But after last date, you cannot file the income tax return. So first we are going through the provision that what is the due date. Then we will discuss what is the last date. So what is the meaning of due date? The provision says due date. It says that due date is 31st of October. You should write over here, sorry. 31st October for certain category of person, 31st October of assessment year, 30th November for certain category of person, and 31st of July for others. So those will fall in this category. They need to file their income tax return due date, that is 31st October. For previous year, 23-24, assessment year 24-25. So we are talking about the date is 31st October 2024. And this is 30th November 2024. And that is 31st July 2024. So all company needs to file their income tax return till 31st October of assessment year. So company will fall in category A. Point number 2, any person other than company, any person, whether it's individual, HUF, AOP, BOI, partnership from anyone, those need to conduct tax audit under Income Tax Act or any other kind of audit. Any other kind of audit. So if any person needs to conduct audit under Income Tax Act or under any other law, their return filing date also 31st of October, whether you are individual, HUF, AOP, BOI, etc. Clear? Any person, now it says any person who is a partner of any firm of which accounts has been audited. Now suppose XYZ is a partnership firm and its partners are X, Y, and Z. XYZ firms went for an audit. So the income tax return filing date for XYZ partnership firm, that will be 31st of October. And because the firm tax audit has been conducted and the firm ITR date is 31st October, so all the partners ITR date will always also be 31st of October. So the third point is connected with point number 2. So it says any person who is a partner of a firm whose accounts are going to be audited. So it's talking about the partnership firm. So if you are a partner of a firm whose accounts are audited, so automatically that firm return filing date is 31st of October and all the partners return filing date will again automatically will be 31st of October. Clear? So if you are a company, your date of filing is 31st of October. If you are any person whose audit is going to be undertaken under income tax law or any other act, or any person who is a partner of the firm whose accounts are required to be audited. So the date will be 31st of October. Clear? Now, if you fall under section 92E, that is transfer pricing, that is not in your intermediate level, that chapter will be discussed under final level, that is transfer pricing. So if transfer pricing provision is applicable upon you in certain condition, then for those person, the return filing date will be 30th November 2024. And all other person, those do not fall in category A or category B. This is category B. So for all those person, the date of filing will be 31st of July. That means all salaried person, we can say. The date of filing is 31st of July. So now you can understand, if any one of your family who is under a service, who is providing, who is doing job, so they file their return up to 31st of July to avoid any interest or late fees. And if any one of your family is involved in a business, and if the business is going through a tax audit, then they do file their return up to 31st of October. So you might get confused why that uncle is saying last date is 31st of July. And now this my uncle or cousin or my parents or my father is saying that the date is October. So why is July or October? So July is for those person, those do not fall in category A or B. And those fall in the category A, the date is 31st October. The B, the date is 30th November. And other than those, that will be 31st of July. So if you are running a business also, and that business does not go under audit, then the date will be automatically July. So may I ask a question to all of you now? So listen carefully. I'm asking a question. Okay. Just we have the provision in front of us technically, and I am going to ask a question on the basis of the provision, and you have to answer it. Listen carefully. Okay. Suppose there is a company ABC Limited. Okay. And its director, one of its director, Mr. Suppose Ram. He is earning salary income from the company. He's only earning salary income. He does not have any other income except the salary income. So what should be the date of filing of return for Mr. Ram? It will be 31st of October or 31st of July. So he is the director of a company, ABC Limited Company. So my question one is this: what will be the date of filing, due date of filing of return to Mr. Ram, whether it's 31st of October or 31st of July? Let me see the queries also. Mr. Tikshanav is investor and traders are comes under this provision. Yes, everybody fall in this provision if they satisfy this condition. So, okay, Ruturaj is saying 31st of July. Dinesh is saying 31st of July, 31st of July, 31st of July. The correct answer is 31st of July. Miss Komal Prajapati is saying October. No. The correct answer is 31st of July. Well done, everyone. High five from Wi-Fi. So the date will be 31st of July. Why? Because Mr. Ram does not fall in category A or category B. So his due date for filing return will be 31st of July. Well done. So these provision has been explained over here. That is 31st October. That is for a company, a person other than a company whose accounts are required to be audited, a partner of a firm whose accounts are required to be audited. So what is the meaning of word whose there? The whose means firm. So if there is a partnership firm whose accounts are required to be audited, so that firm due date is automatically 31st October and all the partner due date also will be 31st of October. 30th November of the assessment year, those fall in the section 92E, that is regarding the transfer pricing that will be discussed in final level. 31st July of all other person. The note has been explained in your study material. Section 92E is not covered within the scope of syllabus of intermediate paper 4A. That should be technically 3A because the paper is now has been changed to 3A. It's not 4A. Okay. Illustration 1. So Paras, age 55 years, is a resident of India. Okay. During the financial year 23-24, interest of 2,88,000 was credited to his non-resident external account with SBI. We discussed this provision in income from other source. Okay. 30,000 being interest on FDR with SBI was credited to his saving bank account during the period. He also earned 3,000 as interest on saving account. Is Paras required to file income tax return? So first we have to answer it. Then it says, what will be your answer if he has incurred 3 lakh as travel expenditure of self and spouse to USA with his married daughter for some time? Okay. So that will be taken later. First of all, we have to answer the first part. So technically, because he's an individual, so the point A or 1 is regarding the company and partnership firm. So it is under point number 2. And point number 2 and 4 is technically merged. So we have to see how much is gross total income or total income. So this 2,88,000, which is the interest from NRE account, is technically exempted. We have discussed this provision under income from other source that if any interest earned on an NRE account, that is going to be exempted. So income will be 30,000. This FDR income 30,000 and interest on saving account interest 3,000. So his GTI technically only 33,000. He can claim if he fall under section 115 BAC, then he cannot claim this saving bank interest deduction under section 80 TTA. So his TI will be 33,000 BACT. 33,000, which is below the basic exemption limit. So he do not need to file any ITR if he fall under section 15 BAC. If he opt out from 115 BAC, then he can claim saving bank interest as deduction under section 80 TTA. So now his TI will be 30,000. So in that scenario also, his basic exemption limit is 2,50,000 and this income does not exceed that. So he do not file any income tax return. And of course, if he went for a foreign travel expenditure more than 2 lakh, he needs to file his ITR. If this 2,88,000 does not exempt, suppose if this 2,88,000 is not exempted, then his total income will be 2,88,000 plus 30,000 plus 3,000. That means 3,21,000. So in that case, it exceeds the basic exemption limit in both scenario, whether it's section 5 BAC or normal. Then we can say yes, he needs to file the income tax return if this 288 not exempted. Suppose is 2,88,000 is not NRE interest income. Suppose it's a dividend income. Suppose it's a house property income. Suppose it's a business income. Suppose it's a salary, net salary income. Then we can say yes, he needs to file income tax return. We have the solution also. You can see that. You can go through it. Exactly same thing has been written over there. And the note explain that if 2,88,000 does not exempt, if this is some other income, etc., in that scenario, his income will exceed 3 lakh basic exemption limit in both cases, whether on 5 BAC or normal case. Next, specified class or classes of person be exempted from filing return of income. So technically, we have discussed the provision though for regarding those person need to file income tax return, but there are certain category of person the government can exempt them to file income tax return. So if government has exempted someone or give the exemption to someone for filing of income tax return, then that person needs not to file income tax return. Okay. The section 139(3) of the Income Tax Act, it says return of loss. You must have gone through the provision of loss, set off of losses, etc., in which you might have understood the provision regarding losses under the income from house property, business losses, in which speculation losses, income from maintaining horse races losses, then capital gain, long-term loss, short-term loss, etc. So if you incurred any loss, then you can, if you are not able to set off that loss in the previous year, then you can carry forward that loss. And to carry forward that loss, you have to file your income tax return on due date. Please listen carefully. If you incurred any loss under any head of income, and if you are not able to set off that loss in the previous year, and if you want to carry forward that loss, to carry forward and set off for subsequent years, then you have to file your income tax return on due date. That is one of the best advantage to file income tax return on due date if you are carrying any loss. Because if you do not file your income tax return on due date, then you cannot carry forward your losses. You cannot carry forward your losses except the losses from income from house property and unabsorbed depreciation. Only these two things can be carried forward even you did not file your return on due date. And all other losses will be your dead loss if you not able to file your income tax return till due date. Section 139 is going to explain this provision. Section 139(3). This section requires the assessee to file a return of loss in the same manner as in the case of return of income, within the time allowed in section 139. But now there is very interesting thing. If you are having a loss under business head, no other income, you are only having loss of rupees 3 lakh in your business head. So as per mandatory filing provision, you do not need to file your income tax return. Mandatory, there is no requirement because your TI is less than basic exemption limit because you are in loss category. And suppose you do not fulfill any specified condition. So if you are having loss, that means you do not need to file your income tax return mandatorily. But if you did not file your return, then there will be a very huge consequence that you cannot carry forward your loss to the subsequent years. So that is for your benefit that you have to file your income tax return voluntarily if you are suffering from any loss. Section 80 require this. Now you can see section 80 belongs to set off and carry forward of losses. And it says mandatory filing of return of loss under section 139(3) on or before the due date is specified in section 139(1) for carry forward the following losses. So section 80 is saying that it is mandatory to file your return if you want to carry forward the loss. Section 139(1) does not say this, that you have to file your loss mandatorily, you have to file your return mandatorily if you are suffering from loss. No, section 139(1) does not say it. It says section 80. And it only says, if you want to carry forward your loss, then you have to file your return mandatory. If you do not want to file your return, do not file it. There will be no interest, no penalty if you are in loss. But the problem is that your loss will be dead. Your loss will be lost. Okay. So what kind of loss you cannot carry forward? Business loss, speculation loss, losses from a specified business, losses under the head capital gain, losses from activity of owning and maintaining resources. So these losses cannot be carried forward if you do not file your return up to due date. So what loss remaining? That is house property loss or unabsorbed depreciation. That can be carried forward even if you file your return after due date. But you have to file your return. Consequently, section 139(3) require filing of return of loss mandatorily within the time allowed. However, loss under that house property under section 71B and unabsorbed depreciation sections 32 can be carried forward for set off even though return of loss has not been filed before the due date. Okay. What are belated return, updated return, revised return? We have just understood what is the return filing due date and what is the return of loss. Now we have three more kinds of category of return, that is belated, updated and revised. So we must know this word belated. It's just like a belated happy birthday. That means you forgot the birthday date to wish someone and now you are wishing that person after that date has been passed on. That is called belated happy birthday. In the same way, the due date of filing of return has been passed. And now you remember, oh God, I did not file my return. Do not worry. The due date has been just passed, but you still can file your return. So whatever return you will be filed, that will be called your belated return. So if any income tax return has been filed after due date, but before the last date, that will be called belated return. Very simple provision. Any person who has not furnished a return of income within the time allowed to him under section 139(1). That means 31st of July or 31st of October or 30th of November. may furnish the return for any previous year at any time. So you can file your return up to 31st of December of 2024. So if you will file it from 31st till 31st of July, that will be a normal return. But if it is filed on or after from 1st August till 31st of December, this is belated. If the due date is 31st October, then if you file return from 1st of November till 31st of December, that will be belated. Okay. So time period is before 3 months prior to the end of the relevant assessment year. That the date will be 31st of December or before the completion of assessment. Now the problem is this. Suppose your due date was 31st of July 2024. You did not file your return on this date. You forgot. Now you can file your return up to 31st of December 2024. But the time says belated return can be filed up to 31st December 24 or before completion of assessment. Whichever is earlier. What is the meaning of completion of assessment? Because you did not file your return up to 31st of July. But after July, suppose the assessing officer, the income tax officer, assessed your income suo moto by himself, khud se. And he's decided because you did not came to furnish your return of income. So assessing officer, that means income tax department, estimated your income, that your income will be 10 lakh rupees and passed an order on 10th November 2024. That date will be given in question. So the last date of belated return will be 31st of December 24. That date will remain fixed. But your department passed an order against you. That is called assessment order against you before this date. That is on 10th November 24. So now which is the earlier? That is 10th November 24. So the last date for filing of belated was 10th November 24. But you want to file that return on 15 December 24. Now you cannot file it because the last date now is not 31st December. But now the last date will be treated as 10th November 24. If income tax department does not pass an assessment order, suppose if income tax department does not pass an assessment order, then the last date will always remain 31st December 24. But if the question says that assessing officer passed an assessment order on 10th 11 2024, now what will be the last date for filing of belated return? Then we have to say 31st December or 10th November. The earlier will be 10th November 24. So if the question says he filed belated return on 15 December, is it a valid return? We will say no, it is not a valid return. And if the condition 2 says suppose he filed return on 15th November 24, that means before, sorry, not 15 November, suppose 5 November 24. So that is before passing of the order date. So that will be called a belated return. So for the purpose of finding out that what is the last date of belated return, that will be 31st December 24 or completion of assessment order, whichever is earlier. The theoretical provision, you have to read them. Now revised return is just like a belated return having a special character. Suppose you have filed your return whether before due date or after due date, whether you filed a normal return before due date or you filed a belated return that is after due date, and you find some mistake in it by yourself. You discovered that, oh, there is something omitted. I have to revise that return because there is some mistake. I have not included some income. I have claimed some wrong deduction, or there is some deduction I need to file again. There's a wrong calculation of tax, whatever it is. So if you find any mistake in your return which has been filed on due date, or after due date, that means belated, you can revise it as many time you want. It's once, twice, or thrice, as many time you want, you can revise it, but the last date of revision is again the same as the last date for filing of return as in case of belated return. That will be 31st of December or before completion of assessment. You can revise that return as many times as you want. So it says, if any person having furnished the return under section 139(1) or belated discover any omission or wrong statement therein, it or he may furnish a revised return same time 31st December before completion of assessment, whichever is earlier. Hence, belated, it should be called revised return, cannot be filed after 31st December of the relevant assessment year. So technically till now we can say what is the due date, that will be 31st of July, 31st of October or 30th of November for different kind of person. What is the last date of filing of return? Whether it's belated or revised. What is the last date? The last date is 31st of December or completion of assessment, whichever is earlier. So the after 31st of December, we cannot file belated or revised return. Clear? Now, this is the quick recap, the summary of all the provision. Institute has beautifully drafted the study material. All the provisions what you are seeing on your screen, that is exactly the study material which has been issued by the institute. I am technically teaching with the institute study material. The diagram, the chart, the summary has been perfectly drafted everywhere. So you can go through this summary part. The return of loss, the belated, the due date of filing of return, everything has been beautifully drafted. Illustration number 2. Explain with brief reason whether the return of income can be revised under section 139(5) of the Income Tax Act in the following cases. Look, there is a very simple provision. We can revise return up to 31st December 24 or before completion of assessment, whichever is earlier. That's it. So they are asking, can a belated return filed can be revised? The answer is yes. Belated can be revised, of course, no problem. Return already revised once under section 139(5) can be revised. Yes, I told you, you can revise the return as many times you want. Return of loss filed can be revised. Yes, that can also be revised. There is no issue. There is no problem. You can revise any return. So you can see the answer, of course. It can be revised in all the three cases. Now section 234A, that is interest for delay in filing the return of income. So the due date for filing of return is 31st of July or October or November. So if you are not able, I've told you, there is no interest, no penalty regarding filing of return if you file your return up to due date. So when interest under section 234A will be applicable, when it will be charged, the heading says interest for default in furnishing return of income up to due date. So if you are not able to file your return of income up to due date, then you need to pay, or you might need to pay interest under section 234A. How it will be calculated? What is the provision that we will be discussing? Before that, let me take the queries if there is any. रिवाइज रिटर्न जीएसटी में भी होता है क्या सर? अमन गुप्ता पूछ रहे हैं, रिवाइज रिटर्न जीएसटी में भी होता है क्या? नहीं, जीएसटी में रिवाइज रिटर्न नहीं होता है। वैसे मैं जीएसटी पढ़ा नहीं रहा हूं, आपकी फैकल्टी ने आपको पढ़ा दिया होगा, बट देयर इज नो कंसेप्ट ऑफ रिवाइज रिटर्न इन जीएसटी। देयर इज अ कंसेप्ट ऑफ एनुअल रिटर्न। अगर हमने रिटर्न फाइलिंग में जीएसटी में कोई गड़बड़ की है तो हम उसे एनुअल रिटर्न में ठीक कर सकते हैं, बट सॉरी मैं ये बता क्यों रहा हूँ। नेक्स्ट इज मिस शोभा कुमारी इज आस्किंग, अगर कोई एसएससी 31st दिसंबर तक भी टैक्स फाइल नहीं करे तो क्या प्रोविजन? अगर आप 31 दिसंबर तक रिटर्न नहीं फाइल करेंगे तो आपकी रिटर्न फाइल नहीं मानी जाएगी। प्रोविजन ये है कि आप डिफॉल्टर माने जाएंगे। अगर मैंडेटरी फाइल करना था एज पर द स्टार्टिंग प्रोविजन और आपने नहीं फाइल करी और डिपार्टमेंट को पता चला, तो एक तो इंटरेस्ट चार्ज होगा और फिर डिपार्टमेंट अपने हिसाब से आपकी इनकम का क्या करेगा, असेसमेंट, और ये मानेगा कि आपने इनकम को छुपाया है। मतलब वो ब्लैक मनी हो सकती है, उसको ब्लैक मनी भी माना जा सकता है। तो अगर इनकम है और रिटर्न फाइल नहीं करी है तो उसके डेट निकलने के बाद आपको इंटरेस्ट, पेनल्टी, टैक्सेस एटसेट्रा देने पड़ सकते हैं, ये हो सकता है। ओके। ओके ममता यादव सर, अभी जीएसटी नहीं करवाया गया, अभी क्लासेस स्टार्ट होंगी नेक्स्ट मंथ से, तो बहुत ही अच्छी बात है। अगर जीएसटी अभी नहीं कराया गया है तो जीएसटी का क्वेश्चन क्यों पूछ रहे हैं, जीएसटी का क्वेश्चन ना पूछें। सो ऑफ कोर्स द टाइम विल कम, यू विल क्रॉस द ब्रिज व्हेन द टाइम विल कम, वो कहते हैं जब होगा तब देखा जाएगा। सो यू विल क्रॉस द ब्रिज व्हेन द टाइम विल कम। ओके sir, before break, kindly clarify for chapter 7 TDS TCS only provision till 194J have been covered. Are we supposed to study by self for the remaining part? Ruturaj, I do not know that the your chapter 7 faculty taught you how much provision regarding chapter 7. You can send your mails or feedback to the board of study or the institute regarding it. I do not have any idea regarding it. I suppose that you must have gone through the provision of advanced tax, TDS, TCS, the complete provision. So whatever your this query, kindly send a mail to the institute or call them. Fine, it's not my criteria. Okay, so we are on the interest for default in furnishing return of income under section 234A. So to charge interest on anything, it's a very simple mathematical question. To charge interest or to calculate interest on any amount, we should know when to charge interest. And section 234A says that yes, interest will be charged if you do not file your return up to due date. So we know when to charge 234A. Now, second thing is on which value should be charged, the amount on which it should be charged. So we will find out on which amount it should be charged. For a time being, whatever is your tax amount, what is your tax amount, assessed tax, that is the amount on which interest need to be charged. Third point is what rate of interest should be applicable. So the rate of interest is 1% per month or part of the month. And the last thing is what is the duration of charging interest? What is the duration? So duration will start after due date has been passed and up to the date of filing of return, or the department will complete your assessment. So I can explain you this with the help of this small example. So for section 234A, or in my opinion for all the section in which if you need to charge the interest in any case, we need to know the four things. If you will give me these four things, I can calculate the interest. And sorry, calculator also. Okay, I need calculator also. So point one is says applicability. When to charge? So 234 interest will be charged if return is filed after due date. So if we do not file our return up to due date, so if return is filed after due date. So that is the applicability part. Now the second is the rate of interest. The rate is very simple. That is 1% per month or part of the month. So when I say part of the month, that means if we are delayed in filing return of income for suppose 2 months and 3 days, then rate of interest will be 3%. That is 1% per month or part of the month. So if you are delay for even one day, that will be considered as a full month. So 3% will be charged if that is 2 months, 3 days. Clear? Third is duration. So duration, that means I need to know the start point. I need to know the end point. So of course, start points after due date. Suppose in our example, if the due date is 31st of July and we did not file the return, then the time period will be start from 1st of August 2024. Interest time duration will be calculated from 1st August 2024 and it will be end at some point of time. There will be two situations. If return filed, if late return filed, return filed by assessee. So the date of filing of return. Suppose he filed return after 3 months, 10 days. That means 4% interest will be charged. Okay? If he does not file return of income, then department complete assessment. Completion of assessment by department. So that date will be the last date. Suppose department complete assessment after 8 months and 9 days. That means 9% interest will be charged. So that is the duration. Now the last is on which amount. So it's a total tax. Whatever is total tax assessed, less whatever TDS has been paid, whatever TCS has been paid, whatever advance tax has been paid, whatever MAT credit, sorry, AMT credit. What is AMT credit? AMT credit will be discussed in chapter number 9. That will be discussed on 25th and 30th of January. So do not bother about the AMT concept. And then any other tax. So this value, whatever amount will remain over here, that is going to be charged with section 234A interest rate. We have all the provision over here. So simple interest 1% per month or part of the month is payable for the period commencing from the date immediately following the due date and ending on the following date. So it will start from 1st of August. If the due date is 31st of October, then it will start from 1st of November. It will be ending on, if return is filed, date of furnishing. If no return filed, date of completion of assessment. Interest will be calculated on amount of total tax, whatever your income, as reduced by advance tax, relief, 115 JDs, AMT credit. No intern section 234 shall be charged on self-assessment tax paid by the assessee on or before the due date. If any tax has been paid by assessee before due date, that also be reduced from the total tax value. Tax on total income determined regulation would not include. This is general provision. You can go through it. Section 143(1) provide that if any sum is found due on the basis of a return of income under after adjustment of tax. So if you filed your return of income, suppose your tax is 10,000 rupees and you have paid 8,000. Then for 2,000, department will issue an intimation and they will demand the tax. Clear? And if your tax is 10,000 and your TDS has been deducted 11,000, that means your tax has been overpaid. Then department will issue an intimation that you have 1,000 rupees as refund and they will transfer that amount into your bank account. But suppose if your tax was 10,000 and you deposit 10,000 exactly, that is, in that case, the acknowledgement of the return will be the deemed intimation. That means that if you need to pay anything, department will call you. If you need to pay anything, department will send you, that not means calling you, that means department will send you an intimation. If you need to, you have tax to pay. If you have refund, then department will also send you intimation that this much amount we are going to refund. But suppose if there is nothing to pay, nothing to refund, in that situation, the acknowledgement of the return will be termed as deemed intimation. Just a second. So that is called deemed intimation. So if there is nothing to refund, nothing to pay, in that situation, there will be a deemed intimation. So the acknowledgement of the return will automatically be considered as deemed intimation. Mr. Mithilesh Kumar is asking, sir, if I am carrying business having GST number, then whether I have to submit return for business and individual both? Uh, if you are carrying a business and that is a proprietorship business, then you have to file only one income tax return. There is no need to file two separate return. So if that is a partnership firm, if you are carrying a business as a partnership firm, then the partnership firm need to file return separately and all partners need to file the return separately. But I guess you are asking that you are carrying a business as yourself, then only one income tax return needs to file. Miss Akshata Kadam, will we file an update return after the due date? No, we will file a belated return after 31st of December. That is the last date of filing of return. So if you are not able to file your return up to 31st of December, then we have the choice of filing updated return. That provision will be discussed. गुंजन कुमार आस्किंग सर 31 अक्टूबर को या 31 अक्टूबर के अंदर 31 अक्टूबर तक फाइल करनी है. लास्ट डेट ड्यू डेट इज 31 ऑफ अक्टूबर तक. उससे पहले भी आप फाइल कर सकते हैं. देयर इज नो प्रॉब्लम. मिस तनु विश्वकर्मा, सर अगर रिटर्न फाइल करते समय मिस्टेक सीए से हो गई तो पेनल्टी कौन पे करेगा? पेनल्टी तो एसएससी ही पे करेगा. सीए क्यों पे करेगा? सीए से मिस्टेक नहीं होती, कभी नहीं होती. नो, वी डू नॉट डू एनी काइंड ऑफ मिस्टेक्स, नेवर. एंड अगर होती है तो हम रिवाइज कर सकते हैं. जब हम कोई रिटर्न फाइल करते हैं तो उसकी कॉपी हम एसएससी को देते हैं. एसएससी उसको एक बार ही चेक करेगा कि हाँ मेरी सारी इंफॉर्मेशन ठीक है या नहीं. अगर कोई मिस्टेक है तो हमारे पास उसे रिवाइज करने का ऑप्शन होता है, बट पेनल्टी पेमेंट करने की लायबिलिटी एसएससी की है. Next is self-assessment. Self-assessment is nothing. It's just like self-assessment. Like before examination, you self-assess that how much marks you can obtain. It's just like a self-assessment. So self-assessment says whatever your income, you need to declare it to the income tax department. Whatever tax liability you have to pay to the income tax department after TDS, TCS, advance tax. If any tax remaining, that is called self-assessment tax. Suppose an assessee having tax liability of 1 lakh rupees. Clear? 1 lakh. Out of which he has paid 50,000 as advance tax. 40,000 as TDS. So now the remaining is only 10,000. So that 10,000 what we pay at the time of filing of return, that is called self-assessment tax. Okay. So this is it says where any tax payable on the basis of return required to be furnished under inter alia. Inter alia means among others. हिंदी में कहते हैं अन्य बातों के साथ साथ. ठीक है. So whatever is your tax, if any tax remaining after the amount of tax already paid, after TDS, after relief credit, relief 89, which we have gone through under salary chapter, AMT credit. What is AMT? We will discuss in next chapter. Any interest, etc. paid. So if any tax is remaining even after paying from point number 1 to point number 5, that amount is called self-assessment tax. So that is need to be paid before filing of return of income. That is called self-assessment tax. Order of adjustment of amount paid by SSC, whatever amount you will pay, department will reduce fees first of all out of it, then interest, and the remaining will be adjusted against the tax. Interest under section 234A, for the purpose of amount, we have explained whatever your self-assessment tax, advance tax will be deducted from it, any TDS, any relief, any AMT credit. After that, the value on which interest will be calculated. Same for section 234B interest. Under section 234B interest, the amount of on which tax need to be calculated, sorry, interest need to be calculated will be after deducting advance tax, TDS, any relief, TCS or AMT credit. Next is the updated income tax return. So if you are not able to file your income tax return up to the last date, and that is 31st of December generally, if the assessment has not been done. So earlier you would not be able to file your return after the last date, but department has introduced a new concept of updated return that is called ITRU, and it can be filed if somebody has not filed their return up to last date of filing of return. There is some special characteristics in respect of this return. It can be filed only once per assessment year. It cannot be revised. As a normal return, you can revise, but if you have filed your updated return, it cannot be revised. It can be filed only once per assessment year. Only amount of income to be offered to tax is to be specified under the prescribed income head. No return can be filed if department proceedings are going on. So if your case is opened under income tax department, if your case is pending, then you cannot file ITRU. If a taxpayer file an updated return and does not pay the additional tax, then the return will be invalid. You have to pay some additional tax also. It's a kind of a penalty, you can understand. The additional tax will be, in some cases it's 25% and in some cases it is 50%. So if within 1 year you file, update return can be filed for 2 years. That means the last date for filing is 31st of December 2024. But update return can be filed up to 31st March 2026. The last date of update is 2026. So if you file your update return up to 31st March 2025, so the additional tax will be 25%. And if you file after 1st April 2005 till 31st March 2026, then the additional tax liability will be 50%. That will be discussed. Just wait. Update return of income, section 139(a). Option to furnish updated return. Any person may furnish an updated return of his income or other person for which he is assessable. That again deemed assessee concept at any time within 24 months from the end of the relevant assessment year. Within 24 months from the end of the relevant assessment year. So what is your assessment year for the purpose of examination? Assessment year is 24-25. So we can file your update up to 24 months from the end of the relevant assessment year. Clear? We have 2 years, okay, to update our return. So this is irrespective of whether or not he has furnished the return under section 139(1) or belated or revised. So whether you filed your due date return or belated or revised or do not file, still you can file your update return. So it does not mandatory. If somebody has filed his return on due date or belated return or revised, even he or she can update their return later. So for the purpose of assessment year 23-24, update return can be filed up to 31st March 2026. And for your assessment year, that is 24-25, we can file it up to 31st March 2027. Clear? Next is non-applicability of the provision of update return. There are certain return for which we cannot update it, or in certain circumstances, we cannot file updated return. The provision of updated return would not apply if the updated return of such person for that assessment year is a loss return. Because to carry forward loss, we have to file a return for up to due date. So if there is a loss return, you cannot file a update return. If your update return has the effect to reducing your tax liability, in update return, only the additional income can be declared. You have to pay some tax. So if after filing updating return, if you want to reduce your tax liability or increase your refund, that is not allowed. So in update return, there will be increment of taxes possible or reduction of refund can be possible, but there cannot be the decrement in the tax liability or refund cannot be increased. So if it is a loss return, you cannot file it. If it has the effect of decreasing the total tax liability, determining on the basis of return furnished under section 139(1), 4 or 5, that is not allowed. If it result in refund or increase the refund, then again it is not allowed. So under update return, department will also accept the money, give us the money, the tax. But we are not going to pay anything. We are not going to reduce our tax. We are not going to increase your refund. We are not going to pay you refund in any case. Update return can be filed if original return is a loss return and update return is a return of income. So if original return you filed up to due date is a return of loss, but now you need to update it into an income return, that is allowed. If any person has a loss in any previous year and has furnished a return of loss on or before the due date of filing return of income under section 139(1), he shall be allowed to furnish an update return. For example, Mr. X has furnished his return of loss assessment year 23-24 on 31st May 23, consisting of 5 lakh as business loss. He can furnish an update return for assessment year 23-24 up to 31st March 26 if such update return is a return of income. Circumstances in which update return cannot be furnished. No update return furnished in the following scenario, where a person has furnished an update return under this subsection for the relevant assessment year. As we have seen, update return can be only filed once. So if you have filed your return once, it cannot again file an update return. And if there is any cases pending under income tax department, then for such year you cannot file an updated return. Clear? Tax on updated return, whatever additional income you will show on which whatever the tax liability or interest liability will arise, you have to pay the tax. Payment of tax, there will be tax, there will be interest, there will be fee, and there will be additional tax also. So there will be two circumstances in which there is no return earlier filed. So tax is to be paid along with interest and fee before furnishing of updating return. Where no return of income under section 139(1) or 4 has been furnished by assessee and tax is payable on the basis of updated return to be furnished by such assessee under section 139(8)(a), the assessee would be liable to pay such tax together with interest, fee, additional tax, etc. You have to pay that amount to the government. Manner of computation of tax payable on the basis of update return, it will be normal case. You have to calculate your tax as per normal case. There is no new calculation of tax required. The total tax to be computed after taking into account. You just need to calculate your total tax liability on the basis of your updated return after deducing if any amount of tax had already been paid as advance tax. If any TDS, TCS has been paid, that will be reduced. Normal tax calculation. Relief under section 89, we all know that, and credit, AMT credit. So suppose your new tax is 1 lakh rupees, 50,000 already paid as advance tax, that will be deducted. 30,000 has been paid as TDS, TCS. So remaining will be 20,000. Your credit under relief 89 is 5,000, remaining is 15,000. And your 10,000 is AMT credit. Then only 5,000 need to be paid as your tax. Interest on section 234A, if no early return has been furnished, same calculation to calculate interest on section 234A also. There is nothing new. In a case where return is furnished earlier, in this case, we have to pay tax as already pay tax whatever we have paid in the early return, that is going to be reduced. For example, earlier there was tax liability of 20,000. We have paid that, we have filed our return of income. Now we are showing extra income under updated return. And on that extra income, there is 5,000 rupees extra tax is there. Then total tax liability will be 20,000 earlier and 5,000 this tax. That will be 25,000. Whatever you have paid earlier 20,000 will be reduced. So remaining will be only 5,000 you have to pay. And if there is any interest and late fee and additional tax calculated, then we have to pay that amount separately also. We will discuss this point number B after the break. Before the break, let me see if there's any query. Mr. Dinesh is asking one ITR, one pen. Only one pen of you can be used in ITR, of course. Mrs. Swati Krishna is asking, Miss Swati Krishna is asking, if a partner earns salary income apart from a partnership firm required to file the return for himself? Yes, if that partner uh, falls under any of the category as we study in the starting of this chapter under mandatory filing of return. So if he falls in any of that category, 1, 2, 3, 4, 5, then he has to file a return of income. Swati Krishna asking, sir, in short, explain the difference between revised return and updated return. Look, there is two different, Swati, there are two different concepts. There is no difference. The difference is like this. Revised return can be filed only up to 31st December 2024 for your current assessment year. But updated return is a return which will be filed only after 31st December. Updated return can be filed only when the time of filing of revised return or bill return has been passed away. So update return is a different concept. It does not have anything to do with the revised return. So revised is return which can be filed up to 31st December 24. And when a revised return, billet return or normal return cannot be filed, only then the update return comes into the picture. So if the last date of filing of return has been passed away, then you can only file a update return up to 2 years from the end of the relevant assessment year. Okay. गुंजन कुमार is saying अपडेट रिटर्न हिंदी में बता दीजिए. ओके. लास्ट डेट हमारी फाइलिंग ऑफ रिटर्न की है 31 दिसंबर 2024. चाहे आप ब्लिटेड फाइल करें चाहे उसे आप रिवाइज फाइल करें. तो अगर कोई 31 दिसंबर 2024 तक अपनी आईटीआर फाइल ही नहीं कर पाता या कर देता है लेकिन उसमें अब उसे कोई रिवीजन करना है, कोई चेंज करना है, कोई इनकम बढ़ानी है, तो उसके लिए अब बिलेटेड नहीं फाइल हो सकती, रिवाइज भी नहीं हो सकती. तो उसके लिए नया कंसेप्ट निकाला डिपार्टमेंट ने, अपडेटेड रिटर्न. अपडेट रिटर्न आप 31 दिसंबर 2024 के बाद फाइल कर सकते हैं और ये आपको 2 असेसमेंट ईयर तक का टाइम देता है. यानी कि असेसमेंट ईयर 24-25 की अगर हम बात करें, दैट मींस हम उसका अपडेट रिटर्न 31 मार्च 2007 तक फाइल कर सकते हैं. 24 मंथ्स वी हैव टू फाइल अपडेट रिटर्न. उस अपडेट रिटर्न में कुछ रिस्ट्रिक्शन है. आप रिफंड नहीं क्लेम कर सकते, आपका रिफंड बढ़ नहीं सकता, आपकी इनकम कम नहीं हो सकती, आपका टैक्स बढ़ सकता है, टैक्स कम नहीं हो सकता, लॉस की रिटर्न आप फाइल नहीं कर सकते. तो ये बेसिक बेसिक चीजें हैं जिसमें अपडेट आप फाइल कर सकते हैं. लेकिन अपडेट फाइल करने के कुछ नुकसान है. आपको एडिशनल टैक्स देना पड़ेगा, आपको इंटरेस्ट देना पड़ेगा, आपको पेनल्टी भी देनी पड़ेगी. बट अगर आप रिटर्न फाइलिंग में कुछ भूल गए हैं तो एक अच्छा वेलकम स्टेप है कि आप अपनी उस गलती को अगले 2 साल तक रेक्टिफाई कर सकते हैं. ये है अपडेट रिटर्न का हिंदी कंसेप्ट हम कह सकते हैं. Rohan Kumar asking, sir, partners of LLP file ITR? Yes, everyone needs to file an ITR if they fulfill any condition from point number 1 till point number 5 of section 139(1), in which we explain person, those need to file returns mandatory. Clear? So now we will go for a short break, and after the break, we will have our short story and we will complete our this provision. So Mr. Nisa, can we go for a break? Mr. Nisar, okay, okay. Welcome back, everyone. So, I believe that you must have taken your tea, coffee, etc. And we are back to our business, to our chapter number 8, what we were discussing. Let me see if there's any query. Sir, please clarify if SSC do not have any tax liability, he has to file nil return. Hemlata, SSC needs to file a return if he falls in any of the category what we have discussed in the starting, in which there is mandatory filing of return. So if your tax liability is nil, but you have any beneficial ownership in any asset which is located outside India, then you have to file your return. Even if your tax liability is nil, but if you deposited more than 50 lakhs in your saving account or incurred 2 lakh rupees in foreign travel, etc., then you have to also file return of income. So it depends whether you have a tax liability or not. That's the only one criteria to file income tax return. But if you do fall in any other criteria, then you have to file your income tax return. Like your electricity consumption is more than 1 lakh rupees in a financial year, then again you have to file your income tax return. Okay. Mr. Ajay Chauhan is asking, sir, once the firm pay tax, then partner will also pay. No, if the partnership firm pay has tax on that income, then on that income, partner do not need to pay any tax because the profit from the firm which is received by the partner is exempt in the hands of partner. But if there is any other income, which is earned by partners separately, like salary income, house property income, etc., or any income on which firm does not pay any tax. In that case, on that income, partner need to pay tax. That we have discussed in PGBP provision in assessment of partnership firm. Okay. Okay, so before going further, now it's a story time, a short story for you, a very interesting also. So story will be in Hindi as always it happened. So बहुत बहुत पुरानी बात है। एक गुरुकुल था, वहाँ बहुत सारे बच्चे सीखने जाते थे, पढ़ने जाते थे और उन्हें युद्ध कौशल भी सिखाया जाता था लड़ाई के लिए, लाइक वेपन्स, आर्चरी और सोर्ड वगैरह एटसेट्रा। तो उस गुरुकुल में हुआ क्या कि जब बहुत सारे बच्चे सीखने के लिए गए हुए थे तो उधर एक टाइम आया जब बहुत बारिश होने लगी और पता चला कि नेक्स्ट 3-4 मंथ्स तक बारिश कंटिन्यूसली हो और बारिश का फिक्स टाइम था फ्रॉम सनराइज टिल सनसेट, मतलब पूरे दिन सुबह से लेके सनराइज से लेके सनसेट तक बारिश होती रहती थी। तो उस टाइम जो भी अभ्यास होना था, जो भी प्रैक्टिस होनी थी उन्हें युद्ध की, वॉर की और अपने वेपन्स की, वो नहीं हो सकती थी। तो आउटडोर में कुछ भी नहीं हो सकता था। तो सारे बच्चे बड़े खुश कि हमें कुछ नहीं करना पड़ा। एक बच्चा बहुत परेशान था, उसे लगा कि मेरा ये जो टाइम है ये वेस्ट हो रहा है, बिकॉज मैं जो सीखने आया हूं मैं सीख नहीं पा रहा हूं। तो बहुत दुखी रहता था, बहुत उदास रहता था। तो एक दिन शाम को जब सब बच्चे खाना खा चुके थे तब वो खाना खाने गया अकेला, और उस टाइम पर लाइट नहीं होती थी, दिए जल रहे थे। तो जैसे ही उसने अपना खाना अपने लिए सर्व करके रखा, खाना स्टार्ट करा, तो तेज हवा आई और सारे दिए बुझ गए। अब एकदम अंधेरा हो गया और वो सोच रहा अब मैं खाना कैसे खाऊंगा, मुझे कुछ दिख नहीं रहा। बट देन ही रियलाइज कि उसके हाथ को तो प्रैक्टिस है, उसे पता है कि खाने का जो बाइट है वो कहाँ से जाना है और ऑटोमेटिक वो उसके मुंह में ही जा रहा है। इवन उसे कुछ नहीं दिख रहा था फिर भी ऑटोमेटिक खाने का बाइट, क्योंकि वो रोज खाना खाते थे तो ऑटोमेटिकली वो उसके मुंह में ही जाता। तो ही वाज थिंकिंग कि मुझे बिना दिखे ये पॉसिबल कैसे है कि मैं खाना का जो भी बाइट है वो मेरे मुंह में ही जा रहा है और मैं प्रॉपर बाइट बना पा रहा हूँ, प्रॉपर खा पा रहा हूँ। तो उसे रियलाइज हुआ कि ये सब ऑटोमेटिक नहीं हो रहा। दैट्स कॉल्ड अ थिंग दैट इज कॉल्ड मसल मेमोरी। एक चीज होती है, साइंटिस्ट भी इस बात को मानते हैं, देयर इज अ थिंग कॉल्ड मसल मेमोरी। मतलब हमारी कोई मसल अगर कोई काम रेगुलरली करती है तो फिर उसे करने के लिए ब्रेन की जरूरत नहीं होती, वो इतनी एडेप्टेबिलिटी हो जाती है कि वो मसल खुद से करती। लाइक द वे यू ड्राइव योर टू व्हीलर और कार। तो जब हमें ब्रेक लगाना होता है तो ब्रेन नहीं बोलता ब्रेक लगाना है, ऑटोमेटिक वी डिड दिस। और इफ यू आर प्लेइंग एनी स्पोर्ट लाइक क्रिकेट, सो जब एक बॉल आती है तो जो बैट्समैन है उसे सोचना नहीं पड़ता कि बॉल बाउंसर है, यॉर्कर है, मुझे ये शॉट ट्राई करना चाहिए। इट्स अ मसल मेमोरी, उस बॉल को वो उसी तरह से हिट करता है। सो उसको रियलाइज हुआ बच्चे को कि दैट इज अ मसल मेमोरी, और उसने नोटिस करा कि जब वो अपनी प्लेट को वापस रखने जा रहा था तो उसे किचन में रोज आने जाने का रास्ता सेम था। तो अंधेरे में भी वो आराम से किचन तक जा पा रहा था और वहां से आराम से आ पाया, क्योंकि उसकी मसल मेमोरी को ये पता था कि अब इसके बाद ये टर्न है, अब इसके बाद यहां से जाना है। सो ही रियलाइज कि क्योंकि रात को अंधेरा हो जाता है, बारिश बंद होती है, तब अंधेरा होता है, तो हम देख नहीं सकते, और देख नहीं सकते तो फिर प्रैक्टिस कैसे होगी। तो ही रियलाइज कि मैं कम से कम आर्चरी की प्रैक्टिस तो कर सकता हूँ, बिकॉज और कोई वेपन के लिए तो दो लोग चाहिए, बट आर्चरी की आई कैन प्रैक्टिस माई सेल्फ। तो उसने अंधेरे में आर्चरी की प्रैक्टिस शुरू करी विद द हेल्प ऑफ हिज मसल मेमोरी। तो वो सुबह से क्या करता था, सुबह जब बारिश हो रही होती थी तो वो अपने टारगेट फिक्स करता था कि मैं शाम को यहाँ यहाँ पर आर्चरी से हिट करने की कोशिश करूंगा। वो सुबह से देखते रहता था उन टारगेट्स को, अपनी ब्रेन मेमोरी में लॉक करता था, और जब अंधेरा हो जाता था तो बिना देखे उन टारगेट को हिट करने की कोशिश करता था। वहां पर उसने छोटी बेल्स लगाई थी, जैसे हवा चलती थी बेल्स की आवाज आती थी, वो उसी टारगेट को हिट करता था। एंड प्रैक्टिस मेक्स अ पर्सन परफेक्ट। व्हाई इट सेज, बिकॉज टैलेंट की जरूरत कम होती है, प्रैक्टिस करने से आप कोई भी चीज अचीव कर सकते हैं। तो इवन इफ यू आर नॉट दैट टैलेंटेड, बट अगर आप उसकी प्रैक्टिस करते रहें बार 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 बार, तो डेफिनेटली आप उस चीज को करना सीख जाएंगे। So it's a very famous saying. It's better to be a confident person who practice every day in comparison to a talented person who doubt himself. तो वो बच्चा ने प्रैक्टिस करते करते वो परफेक्ट हो गया कि वो बिना देखे भी अब आर्चरी कर सकता था। एंड यू नो उसका नाम क्या था? ही वॉज अर्जुन, द महाभारत, द ग्रेटेस्ट आर्चर ऑफ ऑल टाइम। इन द महाभारत he was अर्जुन। दिस स्टोरी ऑफ अर्जुन, दैट्स व्हाई उसको इतना बड़ा आर्चरी में परफेक्शन आता था, बिकॉज उसके लिए वो चीज का पैशन थी। जो भी हर्डल्स थे उसने उसका ढूंढा कि हम इसे कैसे हर्डल को क्रॉस कर सकते हैं, हाउ टू ओवरकम दैट प्रॉब्लम। दैट इज ऑल्सो इन योर लाइफ ऑल्सो। सो वेन एवर यू थिंक देर इज सम हर्डल इन योर लाइफ, अब ये पढ़ाई ऐसे नहीं हो सकती, पढ़ाई वैसे नहीं हो सकती, दिस ऑल वी हैव सॉल्यूशन, वी हैव टू फाइंड इट। तो जब बाकी सारे बच्चे खुश थे कि चलो अब ये 3 महीने तक हमें कोई प्रैक्टिस नहीं करनी पड़ेगी, ही बिकॉज ही हैज द गोल दैट ही वांट्स टू बी द बेस्ट आर्चर इन वर्ल्ड, सो ही फाइंड द सॉल्यूशन। So this is for you also. If you focus, you will find your way you need to achieve to your goal. Then you have to find a way to overcome that hurdles, whatever in your life. And there is always a way to solve any problem. It depends upon how you are going to deal with it. So believe me that please be focused for your goal. अभी रिजल्ट आया कुछ टाइम पहले, माइट बी किसी का अगर नहीं हुआ है तो डू नॉट bother. You have to again start your preparation again, and you have to overcome your weaknesses, whatever it is, and then you have to start again preparation for your next examination. So there was a movie also I saw last month, or I guess in this month, that's 12th Fail. It's a beautiful movie. So if anyone of you want to see the struggle, what is the exact meaning of a struggle, and if somebody wants to achieve something, then no problem can stop him. That is, I have learned from that movie also. So if you have seen that, it's a very good movie. And if you want to see the struggle and how to overcome it, you should watch that movie. It's a beautiful movie. So let's move on to the next provision. Let me see if there's any query. Mr. Rito Banerjee, sir, if an SSC has filed return within due date but not paid self-assessment tax, then will interest be charged or not? Payment on self-assessment tax? First of all, it will be called a defective return. We have to pay tax. We have to pay tax, otherwise it will be called a defective return. And yes, even if he filed return without paying tax, then at the time of paying tax, interest will be charged upon that person, because that is called a defective return. We have the provision section 139.9. We will discuss what is the meaning of defective return. We will see over it. So in a case where return is furnished earlier, section 140B, tax to be paid along with interest before furnishing updated return. So where return of income under section 139, 4 or 5 has been furnished by the assessee and tax is payable by the basis of updated return to be furnished by such assessee, The assessee would be liable to pay such tax together with interest payable under any provision of the Act for any default or delay or payment of advance tax. Same provision. If we do not file any return and we file update return, then we have to pay full tax, whatever the tax has been made or at the time of filing of updated return. But if we've already filed our return under section 139(1), that is on due date, 139(4), that is belated, 139(5), that is revised, then whatever is extra amount we need to pay, after reducing the amount we have already paid, whatever the extra amount, the extra interest, the extra fees, the extra penalty is going to be there, we have to pay that before filing that updated return. The updated return shall be accompanied by a proof of payment of such tax, additional income tax and interest also. Manner of computation of tax payable on the basis of updated return. The tax payable has to be computed after taking into account the following. Of course, whatever is the total tax, we have to deduct whatever tax we have paid. So whatever the credit, if there's any taken, we have to reduce it. The TDS, the TCS, the AMT credit, the relief, we have to deduct that. Whatever is the balance tax, we have to pay that. Interest under section 234B, where earlier return has been furnished, exactly the same concept will be applicable for 234A interest in case of update return. Exactly the same concept under section 234B interest will be applicable in case of updated return. Additional income tax payable at the time of updated return. So in certain case, we have to pay 25% of aggregate of tax, additional tax. And in certain case, we have to pay 50% of tax as an additional tax. The additional income tax payable at the time of furnishing the updated return under section 139(8)(a) would be if such return is furnished after expiry of the time available under section 139(4) or 139(5) of the assessment year and before completion of the period of 12 months from the end of the relevant assessment year. So this point is saying for the purpose of assessment year 24-25, the date is 31st December 2024, the last date of furnishing of return. So if this date has been passed away, then we can file update return. And if update return has been filed from 1st January 2025 till 31st March 2026. In this case, this will fall as this category and we have to pay 25% of the aggregate of tax and interest payable. And if the update return has been filed from 1st April 2026 up to 31st March 2027, then this will fall under this category and 50% of aggregate of tax and interest we need to pay. Because for assessment year 24-25, the last update return can be filed up to 31st March 2027. So if this has been filed during this time duration, we have to pay 25%. If this has been filed this duration, we have to pay 50% of additional as a tax. Next is defective return. As somebody was asking, if we do not pay tax, what will happen? So this will happen. Defective return says if there is any information in the opinion of assessing officer that should be in the return, but if it is missing, the proof of tax or any other information, then that return will be called a defective return. Listen carefully, it will be called a defective return, not invalid return. What will happen? It says if that is a defective return, then assessing officer will give you 15 days time to rectify that defect. And if you are able to rectify that defect in 15 days, then the return will be called as a valid return. But if you are not able to rectify the defect within 15 days, then that return will be called a invalid return. And it will be supposed that no return has been filed. So it's a very important section, section 139(9). Under this section, the assessing officer has the power to call upon the assessee to rectify a defective return, where the assessing officer consider that return of income furnished by the assessee is defective. he may intimate the defect to the assessee and give him an opportunity to rectify the defect within 15 days from the date of intimation. The assessing officer has the discretion to extend the time period. This 15 days time can be increased also on an application made by assessee in this behalf. The period of 15 days will have to be reckoned from the date on which the communication is served upon the assessee. Suppose assessing officer issued notice on 15th of December, received by assessee on 20th of December. So this 15 days limit will be counted from 20th of December, from the date the communication is served upon the assessee. If the defect is not rectified within 15 days or the time extended, that will be called a invalid return. The consequential effect would be the same if the assessee had failed to furnish the return. So it will be assumed as no return has been filed yet. However, the assessee rectifies the defect after the expiry of 15 days or the further extended period, but before the assessment is made, the assessing officer may condone the delay and treat the return as a valid return. Clear? A return of income would be regarded as defective unless the annexure statement, etc., proof of tax, etc., has not been submitted by the assessee. So if you did not pay the tax, the return will be invalid if in a certain time you did not rectify the defect. Fees for default in furnishing return of income, there is a penalty which need to be paid if you are not able to file the return up to the last date as prescribed by the department in different scenario. So it says if you are not able to file the return up to due date, that is 31st of July, 31st of October or 30th of November, then a penalty. If you're filing a return after these date, then a penalty shall be liable to pay the fee of rupees 5,000. However, if the total income of the person does not exceed 5 lakh, the fees payable shall not exceed 1,000. So if the total income is up to 5 lakh, then the penalty is 1,000. If the total income exceeding 5 lakh, then the penalty will be 5,000 rupees. Income tax transparency reform. Now from here onwards, there are the provisions. These are very, very simple. They're only general information. The cases in which you have to submit your PAN number, your Aadhaar number should be linked, etc. These are general provisions and is very theoretical, very basic provision. There's nothing complicated, nothing technical. Certain provisions need going to explain when a person need to apply for a PAN number, where a person should submit his PAN number. Those transactions in which PAN number submission is mandatory. Those persons who do not require to take a PAN number. Aadhaar number should be authenticated and should be informed to the department. Aadhaar number should be linked with the department. So these kind of provisions are over here. The return provisions has been technically completed. Now there are some transaction based PAN number submission, etc. provisions are over here. Why department needs your PAN number? Because they need to check that this person is what kind of transaction has been undertaken by this person. So PAN number is a unique number. It's an identification number. It's a unique number you need to submit for your financial transaction. If you're going for traveling, you are purchasing shares, you are making an FDR, you are opening an account. So a single person, if involving in certain transaction, he has to submit his PAN number. And suppose now I am an income tax officer and you are a assessee. You are undertaking separate transaction, purchasing of shares, purchasing of mutual fund, going for foreign travel, purchasing property, etc. And you have to submit your PAN number at every place. So I am getting the information of your investment and all financial transaction on my desktop. So I am getting, okay, Mr. A is purchasing property, he's purchasing car also, he's investing in shares also. So I will see that whether you are paying tax as comparison to the investment you are making. And if it is not matching, so I will issue a notice or I can ask you that how you are investing in these properties when you have income which is not technically matching with your investment. So that's why department
asking for your PAN and Aadhaar number, so they can actually analyzing that what kind of transaction, financial transaction you are involving, and is these financial transaction, are those financial transactions is technically matching with your income, what you are declaring in income tax act or not. So it's a kind of a information collection process for which these PAN number and Aadhaar number concept has been introduced. So these are just theoretical provision. We just need to read it. We just need to remember what kind of transactions are there for which we have to give our PAN number. Those person who need to apply for a PAN number are up to a certain time limit. So these are the provision. Section 139A. Subsection 1 require the following person mentioned in column number 2 who have not been allotted a PAN account number to apply to the assessing officer within the specific time limit for allotment of a PAN. So every person, if his total income or the total income of any other person that is deemed assessee exceed the maximum amount which is not chargeable to income tax, that means basic exemption limit, he has to apply for this specific date on or before the 31st May of the assessment year for which such income is assessable. So we can say that if our total income for previous year 23-24 if exceed the exemption limit, then before 31st May 2024, we have to apply for PAN number. Just the person and the date you have to learn. Every person carrying on any business or profession whose total sale or turnover exceed 5 lakh rupees only, 5 lakh in a previous year. Again, he also has to apply before the end of the financial year for PAN number. That is 31st March 24. Every person being a resident who is involving in a financial transaction for aggregate 2,50,000 or more, he has to apply before 31st May. You just need to underline the transaction and the date. Every person who is an MD, partner, etc. of point number 3 has to apply also for before 31st May for the PAN number also. Every person who has not allotted a PAN and intends to enter into such transaction as prescribed by CBDT also apply for the PAN. So if you are following in category 1, 2, 3, 4, you have to apply for PAN, or these are other transactions also. Every person intends to deposit cash in his one or more account with a banking company of 20 lakh or more. He has to apply for PAN at least 7 days before. Every person who intends to withdraw cash, even if you are depositing cash or withdrawing cash, you have to apply for PAN more than 20 lakh rupees, same case. Any person intends to open a current account or a cash credit account with a banking company has to apply for a PAN card. The assessing officer, having regard to the nature of transaction, department assessing officer can also allot a PAN suo moto. Point number 3, point number 4, you just need to read it. There is nothing technical, very general provision. Nature of transaction, that is important from the examination point of view. There are certain transactions for which you have to submit your PAN number. There is sale or purchase of a motor vehicle, opening an account, you have to submit your PAN, making an application on any banking company, opening a demat account for share transactions, you have to apply, have to submit PAN for these transactions. Payment to a hotel or restaurant at one time more than 25,000, 50,000, then you have to give your PAN. Payment in connection with travel to any foreign country on which expenditure exceeding 50,000. So you have to remember the transaction and the amount limit also. That can be asked in the examination. For mutual fund investment exceeding 50,000, etc. Then 8, 9, 10, 11, 12. There are certain transactions for which you have to submit your PAN number. You just need to read this transaction and the limit. You have to learn that. Minor to code PAN of parent or guardian, of course. The declaration by a person not having a PAN. If you do not have a PAN, then there is a form number 60. You have to fill it and you have to submit it. Non-applicability of PAN. There are certain person who do not need to submit their PAN for the transaction. If you the central government, state government, you do not need to submit your PAN for the above transaction. If you are a non-resident, then you not need to submit the PAN for following serial number transaction 1, 2, 4, 7, 8, 10, 12, 14, 15, 16, and 17. Intimation of PAN to person deducting. If your employer is deducting your TDS, then you have to intimate your PAN number to your employer. In all documents relating to income tax department, you have to quote your PAN number. Income tax department does not know you with your name or date of birth or father name. They know you with your PAN number. So whatever your income tax document, it's a return of income, TDS certificate, TCS certificate, TDS return filing, anything, you have to quote your PAN number for all your income tax transactions. Requirement to intimate PAN and quote PAN not to apply in certain cases. Kindly read it. Interchangeability of PAN with Aadhaar number. So if you have Aadhaar number and you do not have any PAN number, then you can mention your Aadhaar number where the place in which you do not apply for PAN number yet. So you can use your Aadhaar for a certain time if you have not allotted your PAN yet. Quoting of authentication of PAN or Aadhaar number. Every person entering into such prescribed transaction is required to quote his PAN or Aadhaar, as the case may be, in the documents pertaining to such transaction, and also authenticate such PAN or Aadhaar number in the prescribed manner. What is the meaning of authenticate? We will discuss this later. It has been given. Every person receiving such documents relating to transactions referred to in A has to ensure that the PAN Aadhaar number has been duly quoted in such document, and also ensure the PAN or Aadhaar number is so authenticated. Okay, Mamta is saying, sir, डिफेक्टिव रिटर्न को एक बार हिंदी में बता दो। डिफेक्टिव रिटर्न का मतलब होता है ममता कि अगर आपकी रिटर्न फाइल हुई है उसमें कुछ कमी रह गई है, कुछ डिफेक्ट रह गया है, जैसे कि कोई डॉक्यूमेंट्स नहीं लगाया है, कहीं पर कोई इंफॉर्मेशन भरना रह गई है, एटसेट्रा, कोई गलत 10 नंबर मेंशन है, अगर कोई टीडीएस मैच नहीं हो रहा, एटसेट्रा, तो उस केस में डिपार्टमेंट का असेसिंग ऑफिसर आपको एक नोटिस भेजेगा, 15 दिन का टाइम देता है कि आप इस डिफेक्ट को, इस कमी को दूर कीजिए। अगर आप उसे 15 दिन या उससे ज्यादा एक्सटेंडेड टाइम जो डिपार्टमेंट आपको देगा उसमें दूर कर देंगे तो रिटर्न आपकी नॉर्मल रिटर्न बन जाएगी। लेकिन अगर आप नहीं कर पाए तो आपकी रिटर्न इनवैलिड रिटर्न बना दी जाती है, इनवैलिड, और ये माना जाएगा आपने आज तक कोई रिटर्न फाइल नहीं की। ओके, so these are transaction on which you have to give your PAN or Aadhaar number. Cash deposit more than 20 lakh, cash withdrawal 20 lakh, opening of a current account, etc. You should read it yourself. These are simple things. CBDT have power to make rules. CBDT can make rules for anything. Transaction can be increased, decreased, etc. This is the meaning of authentication. Kindly read it. Penalty for failure to comply with the provision. So failure to comply with the provision of section 139A. That means if you do not apply for PAN, then you have to pay 10,000 rupees. Then 272B, 10,000 for each such default. The transaction in which you have to submit your PAN and you do not submit your PAN, then you have to pay 10,000 rupees as a penalty also. You can read all these provisions. These are very simple, just theoretical. Linking Aadhaar with PAN, our government has said that you have to link your Aadhaar number with your PAN number, or vice versa we can say, and if you do not do so, then your PAN number will be inoperative, and then you have to again connect it with your Aadhaar number, and extra fees of rupees 1,000 will be charged to again make it operative your PAN number again. There is a specific date, I guess that is July 2023. The government initially said this earlier in 2022, but extended till 31st of July, I guess 31st of July 2023. And if till date you did not link your Aadhaar with a PAN, then your PAN number will be inoperative. We have the dates also over here. Every person who is eligible to obtain Aadhaar number is required to mandatorily quote Aadhaar number in the PAN application form in the return of income. As per section 139AA, the apex court, that means Supreme Court in a series of judgment has upheld means passed, the validity of section 139AA consequently with effect from 1st April 2019. The CBDT has clarified that it is mandatory to quote Aadhaar number when filing of return of income. So from 1st April 2019, we cannot file our return without the Aadhaar number. Mandatory quoting of enrollment ID where person does not have Aadhaar number. So if you applied for Aadhaar number but does not get the Aadhaar number yet, then you can use your enrollment ID, which is for 28-digit number in place of your Aadhaar number. That means you have applied for it. So that is a kind of an acknowledgement number to prove that you have applied for the Aadhaar number. So till when you are not able to get your Aadhaar number, you can use that 28-digit enrollment identification number in place of your Aadhaar number. Intimation of Aadhaar number to a prescribed authority, consequence of failure to intimate Aadhaar number. That is the date if a person has been allotted PAN as on 1st July 17 is required to intimate his Aadhaar number under section 139AA has failed to intimate the same to on or before 31st March 22. The PAN of such person would become inoperative and he would be liable to payment of fee is according with section 234H, read with rule number 1145A, that is 1000 rupees. That date of 2022 has been extended by department, by the court, where such person who has not intimated his Aadhaar number on or before 31st March has intimated his Aadhaar PAN number. So if after 31st March you intimate it, then you have to pay 1000 rupees and within 30 days your PAN number will be again operative. If you do not have a PAN number or if you have not linked your Aadhaar with your PAN number, in that scenario, you cannot ask for any refund. You cannot ask for interest on your refund. Your TDS will be deducted higher rate. Your TCS will be deducted at a higher rate. So this is the date, not 31st of July, that is 1st July. The consequence in 3 above would be effective from the date specified by the board, that is 1st July 2023. So from 1st July 23, which has been earlier, that is 31st March 22. It has been earlier date 31st March 22, but it was replaced by extended by the government again and again, and it is effective from now from 1st July 2023. So if you did not link your PAN with Aadhaar till 1st July 2023, then your PAN number will be inoperative and you have to pay fees of 1000 rupees. After that, within 30 days, your PAN number will be operative again. Clarification on consequence of PAN become inoperative. If your PAN become inoperative, then you have to pay a fees of 1000 rupees, of course. These are general provision. Tax return prepare scheme. Income tax has appointed a scheme has been organized by the income tax department, for which you can take help from the tax return prepare, which is appointed by the income tax department after a certain course, after giving a certain examination, you will be qualified as TRP. And a TRP is a kind of an agent via whom you can file your income tax return. If you're an individual or HUF, you can file your return through a TRP also. So this section provides that for the purpose of enabling any specified class or classes of person to prepare and furnish their return of income, the CBDT notify a scheme to provide such person may furnish their return through a income tax return preparers authorized to act as such under the scheme. So we can say these are kind of an agent of income tax department. He will affix his signature on return also. A TRP means any individual other than. So point number 1, 2, 3, 4. These person cannot be appointed as a TRP. Any other person except 1, 2, 3, 4 can work as a TRP after qualify the examination held by the department. Any officer of a scheduled bank, he cannot be in TRP with which the assessee maintain a current account or has other regular dealings. Any legal practitioner, an accountant, an employee of the specified class or class of person. So except these 4, anyone can be a TRP. The specified class or person means for this purpose means any person other than a company or a person whose audit accounts are required to be audited. So an employee of a company or an employee of an organization for which accounts are required to be audited can be appointed as a TRP, but any other employee except the company or organization for which audit has been conducted cannot be appointed as a TRP. The scheme notified that the manner, the educational qualification, the code of conduct, the duties of TRP, etc., general procedure work. Applicability, this scheme is applicable to all eligible person. Return for individual or HUF can be filed by the TRP. Who can the TRP? TRP will be allowed a unique identification number after clear the examination held by the department. These person cannot be appointed as a TRP officer, legal practitioner, accountant. Educational qualification, he must have a bachelor degree from a recognized Indian university or institution, or pass the intermediate level examination conducted by ICAI, ICSI, or Cost Accountants of India. Preparation of and furnishing of return by the TRP, an eligible person made as option. File is written from the TRP, but TRP cannot file a return of a person for which an audit has been conducted. They can file a return of any individual HUF, but they cannot file a return for that person for which audit has been conducted, or they cannot file a return of a person, updated return of a person for which original return has been not filed there. So if a CA filed a original return of a assessee, and if that assessee want to update his return by some TRP, so that is not allowed. So TRP can update or revise a return only of those assessee for which the original return or the other return has also been filed by some other TRP. So if anyone else has been filed a return of an assessee other than TRP, so that TRP cannot revise that return or cannot file the update return of that assessee. Now the question, Mrs. Hetal is an individual engaged in the business of beauty parlor, has got her books of accounts for the financial year 31st March 24 audited. So because the audit has been conducted, she wants to furnish a return of income through a TRP. Is it possible? No. So if any individual HUF has gone through a audit, then such return cannot be furnished by the TRP. Who can authorize to verify the return? Of course, in case of individual will verify the return. In the absent, he's outside India, then individual himself or to the person who has transferred power of attorney, that can validate your return. Where is mentally incapable, then the guardian or any other person will validate his return. For any other reason is not possible, then the person authorized by him can validate his return. In case of HUF, the Karta will validate. If Karta is absent, then any other adult member of the HUF. Karta is mentally incapable, then any other adult member of HUF. In case of company, the MD is not available, director or other person. Where the company is non-resident, the MD or a power attorney holder. Where the company is wound up, then the liquid will validate the return. Where the management of the company has been taken by the government, then the principal officer of the company will evaluate the return. Next, in case of these person can verify or validate the return. These are the test your knowledge question, what I wanted to discuss with you. So state with the reason whether you agree or disagree with the following statement. Return of income of LLP. Return of income of LLP could be verified by other partner. The designated partner need to validate the return. Is there any problem in internet? Just a second. So return of LLP can be signed by the designated partner. Time limit for filing return under section 139(1) in the case of Mr. A having total turnover of 160 lakh for the year ended 31st March 24, whether or not declaring presumptive income. So if your turnover is 160 lakh, the question is asking what is the time limit due date for filing of return. So if under section 44 it is applicable or not. So if in this case the turnover under section 44 AD and the presumptive income has been declared is more than 6% or 8%, then the time limit will be 31st of July. But if the income declared section 44 AD is less than 6% or 8%, then we have to go for audit. So if in this point number B, if the assessee is going for audit, then the date will be 31st of October. But if they are declare income more than or equal to 6% or 8% under presumptive taxation scheme, in that scenario, the date will be 31st of July. Okay, Mr. Vineet is asking, excise the option shifting out of the default tax regime provided section so and so. Salary income from house property and bank interest on 21st/12/24, he realized that he had not claimed reduction section 80 TTA in respect of his interest income. So can he do so? Yes. So on 21st/12/2024, if he realized that he did not claim, then he can revise his return. If he has filed his return on 12th September, then he can revise his return, and up to 31st December, he can revise it. But would your answer be different if he discovered this omission on 21st March 25? Yes. If he discovered this omission on 21st March 25, then he cannot revise his return, then he can file an updated return, because revised return can be possible up to 31st of December 2024. Examine with reason whether the following statements are true or false with the regard to the provision of income tax. The assessing officer has the power inter alia to allot pen to any person by whom no tax is payable. Yes, if you'll go through with the provision of pen number allotment in detail, you will see there is a power of suo motu allotment of pen number to the assessee by assessing officer. Where the Karta of HU is absent from India, the return of income can be verified by any male member? No, it's false. The return can be verified by any adult member. It's not mandatory to have a male member, any adult member. Explain the term return of loss under the Income Tax Act 1961. Can any loss be carried forward even if return of loss has been not filed as required? No. Return of loss need to be filed within due date. But if it is filed after due date, then the unabsorbed depreciation and house property loss can only be carried forward. Mr. Akash is taking certain transaction, you have to tell whether he needs to mention his pen or not. So in case number 1, he needs not to mention pen number as per the transaction for which we need to apply for pen. That is point number 1 till 18 points. You have to read that point and then you can answer. In following situation, he has to submit his pen or not. We have the answer over here also. So let me see if there's any query. Voice, okay. Can CA be a TRP? No. A CA intermediate qualification can be apply for a TRP, but an accountant, but the qualification, the word was accountant. So a CA cannot be a TRP because accountant means chartered accountant. So a chartered accountant cannot be a technically TRP. So please revise twice. That's my advice to make you wise. You have to revise this chapter. This chapter has because it's completely theoretically, so you have to give some time. If you revise this chapter once or twice, the provisions are not difficult, they're very easy. And again, I am telling you, this is very important for your examination also. In exam also, there's probability that a lot of question, not a lot of, but a certain question is going to be asked from these provisions, because practically this chapter is very important when you need to know who needs to file return, when to file return, what are the consequences to not file return on time, what is updated return, the transaction on which pen number needs to code. So this is the chapter which gives you a lot of information regarding the practical applicability of income tax provision regarding filing of return, etc. So please, as I requested in the starting of this class, that our next class in 25th and then on 30th of January, and that is for computation of tax and total income. And please revise the basic concept chapter in which the tax slab rate 2,50,000, then 3 lakh, then the 115 BAC 3 lakh, 6 lakh, 9 lakh, the surcharge provision, the marginal relief concept, the education cess concept, the salary topic. Just revise salary topic, basic concepts. So that will really going to help you when we will discuss the provision regarding total income calculation and calculation of tax. That's a numerical chapter. That's a complete questions of full head, 5 heads, reduction, set off, clubbing, etc., etc. Everything is going to be consist in the same question. So those chapter kind of question is going to be asked in compulsory question number 1. That's a very important question. Do revise the provision as I asked you. So it will help you in the class also. So till that, just take care and keep study. And we will see you again on 25th of January. That is the day after tomorrow. So Mr. Nisa, can we close the